Inspiring interviews with today's top landlords. This is the Rental Income Podcast. And now, Dan Lane.
For a rental property to work, the numbers have to make sense. And Josh, the problem that you ran into was that the numbers just didn't make sense in your town.
Yeah, I mean, when I began looking for rental properties, a property in my local area for a 3-bed, 2-bath was around $375,000 and would maybe rent for $2,000. And so when I started looking outside of my local market, I found an area where I was able to buy a 3-bed, 2-bath for around $80,000, and it would rent anywhere from $1,200 to $1,300 a month.
Wow.
So my return on my cash was much better.
How did you find that other area?
Yeah, I mean, once I knew that I wanted to invest in rental properties, I obviously began looking locally, but the numbers didn't work. I was looking for more cash flow and a lower cost of entry. And my wife's grandma lives in a small town in western Minnesota where she grew up. She finished the basement of their house into 2 apartments, and that, she always had them rented out, and that piqued my interest. And so I started doing some due diligence in that area, which is a small town in western Minnesota. And after doing a lot of research online and, looking at the percentage of the population that rents, getting an understanding of the local economy, I really felt strongly that this was a great place to start. And so I invested in that area.
On the podcast today, we'll talk more about how Josh did his research. We'll talk about how he found the deals he ended up buying, how he self-manages from 2 hours away, and we'll take a look at his numbers and see if his rentals are profitable. Joining us on the show today from the Twin Cities is Josh Bast. We'll take a really quick break to thank our sponsors. We'll come right back and we'll talk to Josh. It's a lot of work to find a really good rental property. And when you actually find that property, you want to make sure you're working with a lender that can get that loan closed. The lender that I recommend is Chaley Ridge from Ridge Lending Group. She's a nationwide lender, and her specialty is helping investors finance rental properties. She has a ton of loan programs, and she can find something customized to you for your situation. If you want to find out more or you're ready to get started today, just go to ridgelendinggroup.com. That's RIDGE lendinggroup.com, NMLS 42056. Josh, why don't we start things off talking about your portfolio? Can you tell me what your portfolio looks like?
Yeah, so I invest in a small town in western Minnesota. I have a total of 11 doors, 8 properties. A mix of single-family homes and small multi-family. I have 2 small multi-family properties, a duplex and a triplex. They vary in terms of the size, so a mix of 3-bed, 2-bath to 3-bed, 1-bath. The properties vary in terms of the work that was required to get into them. I have a mix of BRRRR properties, turnkey properties, and as I mentioned, the multifamily properties as well.
So let's kind of walk through how you got to this town. So did you start off analyzing deals locally, like back when you first kind of got the idea that you wanted to buy rentals, and then did you figure out that it just wasn't going to work?
Yeah. So, I mean, I grew up, just to give you the long story of it, I grew up in a family of entrepreneurs. And so my family has owned various businesses. I've owned various businesses. And around 2018, I sold my last business and began looking for, kind of that next thing that I wanted to focus my creative energy on, and, stumbled across your podcast and a few other podcasts and really became hooked on real estate. And I started looking locally once I knew that I wanted to invest in real estate. And, I just wasn't seeing the return on my cash that I was really hoping for. Ultimately, my goal was to replace my W-2 income with rental properties, and, investing locally, the price, the entry point was just much higher relative to the cash I would get in return in rents. And so I started looking outside of the Twin Cities here, landed on a small town in western Minnesota. My wife is from that area. And so after crunching the numbers and getting a good feel for the local economy and what I would get in return, in rents relative to the purchase price of these houses, I knew I found a great place.
Did you know the area very well?
I did not. I mean, only from visiting family out in that area. But honestly, as an investor, I did not know the area very well. So it took a little time to get acclimated. But I was able to get connected with an agent locally, that helped walk me through some properties and get me acclimated to the area in terms of some good areas to invest and areas to avoid.
Did you do a lot of research online, like before you talked to your realtor, like looking at any data, or did you just have a feeling that just from seeing property values being so cheap that the numbers just had to work much better?
Yeah, I did. I did do a fair amount of due diligence online. I mean, looking at the percentage of the population that rents relative to the total population, and the area that I invest in has a very high population that rents, and so I felt really good about investing in that area. I did other research as well as looking at the prices of the properties and what I would expect back in rent. So I would go on Craigslist or Facebook Marketplace and look at what does a 3-bed 2-bath go for in this area, and so I was able to do some quick number crunching from that standpoint and get more comfortable with the numbers from there.
Tell me about your realtor, because a lot of people, when they invest out of town or even locally, they feel like they need an investor that specializes in investors, like an investor-friendly realtor. And I feel like that's maybe helpful to some degree, but at the end of the day, it's really on you to figure out if something's going to be a good property or not. So, like, what did you do? Did you find an investor-friendly agent, or did you work with a regular realtor?
No, I agree. I think it's incumbent on the investor to understand the market, understand the criteria, and really educate your agent in terms of what you're looking for. And once you do that work on the front end, I think your agent can pick up on that and then provide opportunities for you based on the criteria that you're able to give them. So my agent was not savvy in the way of real estate rental property investing. It took a little work on the front end to get them up to speed, but now that we've done a handful of deals together, they're really comfortable with the criteria, the things that I'm looking for. And so we can avoid deals that, likely wouldn't fit my criteria and my portfolio.
Right. So how did you see properties? So I guess everything you've bought has been off the MLS?
For the most part, yes. So
okay.
I have, as I mentioned, I have 8 total properties, and I would say 6 of them were bought off the MLS.
Okay.
The other 2 were off market. And I actually have bought all of my properties with the exception of one remotely. So my real estate agent would go and tour the property, take pictures, or even do a video call with me. And we would do a walkthrough that way, just to speed up the process, right? Just so I didn't have to wait, to submit an offer, and I would be first to market from that standpoint. So it was a very efficient way for us to get into properties quickly, get our offer in quickly and capitalize on new opportunities that would hit the MLS.
So you would make an offer without physically being at the property?
Correct.
Wow.
Yeah. I mean, I recently went on a business trip to Colorado, and in the same, on the same business trip, I submitted an offer, I signed a lease, and I took care of multiple maintenance requests all remotely.
So awesome. All right. Well, let's talk about your portfolio a little bit more. So you've got some single family, and then you've got some duplexes or multifamily. What are the other properties?
Yeah, so it's 6 single family homes, varying bedrooms in terms of size there. Usually around a 3-bed 2-bath is what my target is, and then I have 2 small multifamily properties, 1 duplex, and then 1 triplex.
Do you notice that the duplex or the triplex that they're different than the single families? Like, do tenants maybe not stay as long? Or do you have more trouble with those properties?
So far, so good, to be honest with you, Dan. I've only owned these properties for a year and a half, and we haven't had significant turnover. We've only had turnover in 1 unit in the duplex, and we had it rented within days of it being vacant. So far, so good. I know that there tend to be issues just because of the types of properties where maybe there is higher turnover, but we try and do as much screening on the front end as we can to select tenants
Yeah.
that potentially could stay longer, just to reduce that turnover.
Wow. So you've done a lot in a year and a half like that. So how often are you buying a property? It must be every few months or something, right?
Yeah, I do try and target buying a new property every few months. Despite the pandemic, I had a very good 2020. There was a lot of opportunity out there, so I was able to buy 5 of my properties
Wow.
during 2020. So yeah, every few months, we're targeting trying to pull in a new property into our portfolio.
And how are you financing the properties?
So financing, just to begin with, started with a HELOC. So we used our principal residence to pull a HELOC, a home equity line of credit against it. And that was instrumental in getting us into the business. So we were able to use that for the down payment on our first property. We were able to use that in addition to a 0% credit card to finance some of the repairs. And that first property was a BRRRR property. And so we were able to pull the cash back out and roll that cash into more properties that were turnkey and additional BRRRR properties as well. So it's been a mix of some invested cash, and the HELOC.
Let's get into some numbers here. How much cash would you say that you've actually invested into your portfolio?
Total cash out of pocket, and I don't count my home equity line of credit into this number. I'm talking just strictly my own cash out of pocket, has been $25,000 or less.
Okay.
It's hard to really track that number because I've refinanced my properties multiple times to pull my cash back out and then reinvest that cash. But if I had to say over the course of the last 2 years during my investing, it would be, around $20,000 to $25,000 in cash.
And then let's get into some rents and look at the other numbers. So how much gross rent do you bring in every month?
Gross rent numbers are around 11,000, just over 11,000
Okay.
per month across all the properties.
And then how much are your mortgage payments?
Mortgage payments are just over 5,000.
Okay. And that includes your taxes and insurance?
That's correct.
Okay. And you've got mortgages on every property?
Correct.
Okay. So you've got 11,000 in rent, you've got your $5,000 in mortgages going out, and you've got $6,000 left over. Now, I always like to hear about how people deal with their repairs or vacancy. So do you set aside a certain percentage for that, or how do you handle any expenses that may come up?
Yeah, so every net dollar that comes in after we pay the mortgage, taxes, and insurance just goes right back into the pot. And we're in full on growth mode right now, so I'm not taking any owner's draws or anything. I'm not paying myself anything. Everything's being reinvested to continue to grow the portfolio. So all of the money that's left over after paying the mortgage is used to pay for expenses.
Okay, so every month you've got $6,000 left in the account, and that just piles up so that when something big happens, you've got money. Or if everybody were to move out at the same time, you've got money to cover the mortgages.
Exactly. Yes, we feel that it reduces risk
to
be able to stockpile some cash, and also gives us an opportunity to jump on a house if something were to become available. Right. We have the cash available.
That's basically your down payment money too for your next property, your next purchase. So you're not having to maybe dip into your savings. You've got the money from the rentals to reinvest into buying more rentals.
Exactly. That's the idea. We wanted to have a buffer for any major expenses that were to come up, but also give us an opportunity to jump on a new house that were to present itself.
So you mentioned that your long-term goal is to replace your W-2 job. How many properties do you think you're going to need to be able to do that?
Yeah, that's a tough question to answer exactly. It's one that I think that everyone needs to consider just to have a goal in mind. I'm not exactly sure what that number is for me at this point in time. I have a young family, and so we're trying to figure out the sort of lifestyle that we'd like for the long term. And so I don't have a specific number, but I think the number that everybody throws out is $10,000 a month in net cash flow. And so I think that that's a goal that I have in the back of my head, but I don't know if I personally will be able to stop there just because of the entrepreneurial nature of of who I am.
Yeah.
And so I feel as though I would want to continue to build and see how big I can make that number. But I think that that's a good goal. That's in the back of my mind.
Yeah. I think the longer you can keep your job, the better, because it's going to be easier to get financing while you still have a W-2. And, why not just try to build up as much cash flow as you can? So, yeah, I say keep working if you can, if you're not absolutely miserable at your job. All right, so let's talk about how you do the management, because you're about 2 hours away.
That's correct. So I call it a hybrid model of management. And, as you mentioned, because I live hours away, I still need some boots on the ground to support the turnover of units. And so actually my real estate agent is able to show the properties for me, and she's able to conduct initial live screenings of the tenant. She handles the exchange of keys and any move in, move out related items once the tenant is selected. And I pay her half of the first month's rent to do this. And what I handle includes the lease, any additional paperwork, which I have all of our tenants sign digitally, any maintenance requests that come in, rent payments, and day-to-day inquiries from the tenants. And so if a maintenance request comes in, I schedule my handyman or the appropriate trade to get it fixed. And the nice thing is my handyman is actually my real estate agent's husband. So that makes things much more streamlined. But they coordinate directly with the tenant, and then they drop a bill in the mail for any maintenance requests. And so I use apartments.com right now to collect applications, rent, do background checks, maintenance requests, so on and so forth. So it's really all digital and can be managed from anywhere.
Yeah.
And as I mentioned, I was recently in Colorado for a work trip, and I'm able to conduct and manage my business, from anywhere really.
So your realtor doesn't charge you any kind of a monthly fee. She's just there if you need boots on the ground, mainly for leasing.
Exactly. I just pay her half of the first month's rent, and she handles the lease up. I do pay her hourly if there's something that goes above and beyond. Sometimes she'll help her husband with painting to turn over a unit, or she'll run some errands, or, go collect quarters from our laundry machines, so on and so forth. And so I'll pay her, an hourly wage, if she's running some errands, but otherwise it's just half of the first month's rent, and the rest of the day-to-day management is handled by me.
That's incredible. And really, there's no reason for you to be at the property other than maybe doing an inspection. Do you do inspections from time to time?
We do. Every 6 months, we try and inspect the properties just so our tenants are aware that, we expect them to take good care of the property, and that we can, monitor any major maintenance issues that come up. And they conduct all of those 6-month screenings and those 6-month checkups, we call them, just to make sure that the properties are in good shape. But to be honest with you, I haven't met them in person. I communicate with them on a daily basis, but I couldn't tell you who they are in a crowd of people.
That is great. Wow. Has anything bad happened?
For the most part, no. I do have one story that has come up recently that was a bit of a hiccup, and I think that every landlord will tell you that these things do tend to happen. But I have one tenant that is deaf, and so unfortunately, communicating with them in writing can be a bit difficult. And so we can communicate via a translator over the phone, but some things, just get lost via that method as well. And we ran into an issue recently with a little black mold in the basement of the property, and I had given the tenant the okay to pull out the sheetrock in that one specific area to fix it. And he's done work for me before in the past, and so I was really comfortable with him doing the work. But sadly, there was a miscommunication somewhere along the lines there, and he interpreted my direction as he should take down all of the sheetrock in the basement down to the concrete block. And so long story short, we're working together to put everything back together, and he's doing a lot of that work for free just because of the mistake. But I'm also covering a lot of the costs just due to the mold issue. And I think the silver lining in all of this is we were able to completely rid the basement of any water and mold issues, something we may not have discovered without all of the sheetrock and studs coming down. And so I think the moral of the story here is just make sure you're very clear with your instructions with your tenants and with your subs and so on and so forth. So
how did you even figure out that had happened?
Yeah, so in the city where I purchased my rentals, they require that you get registered with the city and you pass a certification, and they have a certain set of criteria and standard for renting properties out in the area. And we had we had the city come in to do a checkup, and my real estate agent discovered that the tenant had taken the sheetrock and the studs all the way down.
Landlords generally don't like city inspections, but in this case, it sounds like it actually benefited you. Josh, congratulations on building out this great portfolio remotely. It's really amazing what you can do with rental properties, and I think this is probably very inspiring for anyone that lives in an expensive area. If Josh inspired you and you're ready to buy your first rental property or you want to add to your portfolio, the lender that I recommend is Chaley Ridge. She's a nationwide lender, and her specialty is helping investors finance rental properties. She has a ton of different loan programs, and she can find something customized to you in your situation. If you want to find out more or you want to set up a time to talk to Chaley personally, just go to ridgelendinggroup.com. That's RIDGE lendinggroup.com, NMLS 42056. Thank you so much for listening to the podcast today. Make sure you subscribe or follow the show, and you'll get notified as soon as episodes come out. My name is Dan Lane, and this has been the Rental Income Podcast.